Well, hello and welcome back to the iWealth podcast. Today we've got the man, the mystery, the legend, Mr. Brad Connors with us. And today I would like to take a little bit of time to learn a little bit about income taxes and some of the key mistakes that we're seeing these days with this. So Brad, kind of talk us through what are some of the key things that people are making mistakes on when it comes to income taxes.
You know, it might seem simplified, Matt, but when it comes to income taxes, people just don't pay attention. Obviously, we trust advisors. People trust me to handle their money. People trust their accountant to take care of their taxes. But they also need to be proactive. And what I mean by that is that they should have a meeting with their tax advisor November, December every year.
Okay. Not wait until the last second when your taxes are due and they're absolutely slammed.
Right, exactly. Because there's a lot of things to do. And I'm thinking from a small business standpoint, but not even from that, just from somebody that's retired even. Tax brackets move every single year. So a year ago, we had all of a sudden tax reform happen, and we had a 15% tax bracket go to 12. Well, where's the cap of the 15% tax bracket that's now 12? Is it 30 grand? Is it 50 grand? So you really need to have a conversation with your tax advisor or financial advisor to take a look at your income and look at your taxes. And a lot of times people feel like they're paying way too much in taxes. We all feel like we are, right? But if you sit down and you analyze that all of a sudden you're sitting in a 12% tax bracket, maybe you should be looking at a Roth IRA or a Roth conversion because you're in a low tax bracket, and somewhere down the road you might be in a higher tax bracket. So anyway, one of the things I see is just people not paying attention. You should know what bracket you're in. If today you're listening to this and you don't know what bracket you're in, go grab your 1040. Take a look at line 43 last year. This year, I think it's like 17. It all kind of changed. Take a look at your total income tax, and then go on and Google and look at the tax brackets. Married, filing, jointly, find out where you're at, and see what bracket you're in. I think a lot of people would be surprised on how taxes work, that they, the first, $10,000 is at 0%, and it goes to 10%, and it goes to 12, and it's a progressive bracket. So
yeah, even that one little piece of it is something that's understood. They kind of think that the tax bracket locks you in at a certain level, but it's not really like that. It's that the first, like you said, 10 or 20,000 or whatever is taxed at one level, and then you additionally add on as you basically bracket up.
Correct. Yeah. And then on the small business, you'd asked about taxes. On a small business owner standpoint, I have clients, all of a sudden it gets to December 20th and they're like, hey, I need to buy a pickup truck today, or I need a new microphone, or I need a new pipe wrench, or whatever that is, because they want the tax write-off. Many people miss the boat that they can set up their own retirement plan. You can be a one-person business and have a retirement plan. The advantage is in a good year, if you took $6,000 or $10,000, you put it in this retirement plan, it's like buying a $10,000 truck. You get the write-off. The advantage is hopefully it doesn't depreciate. It sits in an account and appreciates, right?
Yep.
The flip side of that is, let's say that you get in a pickle and you don't have a good year. So 3 years down the road, you threw that $10,000 in, and all of a sudden you have a bad year. Farming didn't go well, or your business didn't go well. Now you can convert that IRA to a Roth IRA in a lower bracket.
Interesting.
So you can do a flip with it. So you kind of get a do-over with the investment, but you also don't have to buy the next piece of machinery. If you've got the cash, I have farmers all the time say, Brad, I don't want to sell a bucket of dirt when I retire. Obviously, it's a big income source for them to rent the farmland out, and they should have that. But the good ones also understand that they need to have a pot of money that they've put away as well.
That's very cool. Well, thank you for sharing a little bit of this with us, and we will look forward to visiting with you the next time.
You bet. Thanks a lot, Matt. Take care.